terms of what to watch for in the week ahead, markets continue to trade on headlines on the US-Iran war. We saw that play out earlier in the week. We saw oil prices initially jump on the back of news that Iran could potentially close the Strait of Hormuz again, and President Trump threatened military action against Iran. However, we saw oil prices quickly reverse course after peace talks in Switzerland proceeded as expected, and there were some reports saying that encouraging progress has been made. So talks are going to continue in the coming weeks with outstanding issues including the Israeli-Hezbollah conflict in Lebanon and also Iran's nuclear program. Now, it is positive that the two warring sides continue to talk, but the weekend events do suggest that the ceasefire is still very fragile and at risk of collapsing. But it is important to note that financial markets, including FX and bond markets, have become less sensitive to changes in oil prices than in previous months. Locally, we got the CPI data in Australia yesterday. Today, it is Labour Force Thursday. So the last Labour Force report was a weak one, with employment softening by almost 20,000 and the unemployment rate lifting to 4.5%. We think that some of that reflected normal volatility in the survey, whereas some of that reflected a gradually loosening labour market in Australia. Based on our internal data, we think that the report for the month of May could show that employment could recover by 30,000 in May, whereas the unemployment rate could stay steady at 4.5%. Now, it is a very volatile survey. That's why economists used to call it a labor force lottery. The monthly survey does have the potential to throw up an unusual set of numbers, so we'll have to wait and see what the data print today. Moving beyond May, we do see the labour market in Australia continue to loosen as the economy slows, so that will continue to support our view that the RBA has already finished tightening the rate hiking cycle. Offshore focus will be on the PCE deflator in the US. That is the Federal Reserve's preferred inflation gauge. As a result, it is always highly watched by financial market participants. But I think moving forward, the PCE data will continue to receive even more attention from market participants because Kevin Walsh at the last meeting reiterated his strong commitment to inflation. So I think markets are going to pay even more attention to the PCE report going forward. Now, based on the CPI and PPI figures that were already released, we think that the headline measure could rise by a solid 0.4% in the month of May, whereas the core measure could rise by a solid 0.3%. With the AI investment boom and income tax cuts adding to demand in the economy, I think that the risks are skewed to an even hotter set of figures tonight, and that could reinforce the Federal Reserve's hawkish message and potentially prompt markets to price in an even faster and bigger Fed rate hiking cycle.